Vibhav Kapoor joins us. He is a Group Investment Officer with IL&FS. Vibhav, good morning. Thank you for joining us. Vibhav, after a rewarding September, we are in for a volatile October. How would you dissect this month's price action?
See, overall the sentiment is definitely positive after the government announcements last month, but then the market has run up about 600 nifty points from 50 to 5800. So it's definitely due for a correction. And I think at higher levels probably the investors and fund managers are sitting down and reviewing the valuations and the prospects going forward. So there's some amount of profit booking beginning to happen at those levels. Also of late in the last 4-5 days, I think the global markets have also turned a little bit negative and have gone into a corrective mode. So I would think most of September you would see this correction continuing.
But Vibhav, what is it that you think is causing this kind of weakness in the market, and how lower could we drift from levels already testing 5650 after making a dash at 5800 not too while back?
Well, as I said, it's mainly profit booking because the market went up too quickly. It went up by 600 points. So it's quite natural that people who had bought earlier would book profits. And since at 5800, you know, the valuations again start to look a little bit expensive. According to our estimates, at around 5800, the market trades at about 14 times 12 months forward earnings. And a re-rating above that level would definitely need you know, some more action on the ground by the government. And also, as I said, the global markets have turned a little bit negative, partly because of, again, resurfacing of European problems. Also the fact that the US earnings season is not expected to be too good. US elections are coming near. The fiscal cliff is again looming ahead. So all markets have had a very good run, and it's quite natural for them, I think, to correct at least, you know, give up maybe 20 to 30% of the gains they made in the last 1 month.
So, Vibhav, is it time to take some chips off the table? Is it time to bail out and log out, or still stay invested, but at the same time also buy protection by buying some nifty puts?
No, I think there are two fact points there. One is that you know, it's not time to buy at 5900 levels, because as I said, the market is a bit expensive there and has run up a lot. But once the correction goes through for a couple of weeks and maybe around 5500 levels or 5550 levels, one could start looking at again adding stocks to your portfolio. But I think even now, with all this good sentiment, it's probably good to be only in the large caps and the companies which have strong balance sheets rather than getting into mid caps and getting into more speculative and risky investments.
Do you think cement stocks are looking slightly expensive, and at these levels they do not justify a valuation call? Yes, technically they may hold on, but valuation wise, to your assessment, is cement a sell now?
Well, to be honest, you know, the real big rise in cement stocks over the last 8-9 months has quite surprised us. But then cement companies have generally done pretty well. EBITDA per ton has been maintained at about more than 1,000 rupees per ton, which for us was a little surprising, given the fact that the industry was only utilizing 75-77% of capacity. But going forward, I think capacity additions are going to slow down very significantly, and if demand continues to grow at 7-8%, then the operating leverage will come back. Raw material prices are not going up too much, so the outlook has definitely improved. Probably the market has foreseen that and has factored in a lot of that already. So from here onwards, I wouldn't expect cement stocks to come down in a very dramatic way. Probably there will be market performance from these levels.